You asked for it, so now you're gonna get it. Third video in the trilogy. So get ready to learn something useful. So I'm Mr. A, third video in the trilogy. By that is the financial statement sort of thing. Basically, business studies. Maybe you're studying commerce, economics in uni or in college, or maybe you're in TAFE, or maybe you got your own business. Financial statements are pretty important. Learning how to make money. So, concept, we've got cash flow statements. In the trilogy, what I mean by that is that there are other statements too. There's our videos that are on my channel, links below. Also, don't forget to hit like, subscribe, and click that bell icon for notifications. Also, feel free to check out my Patreon page to spread the love and kudos if this video helps you out. Always helps it keep things free. Alrighty, so you got to risk it to get the biscuit. Let's make money. Let's move on. So, financial statements, cash flow statements are essential to business. It's in accounting. It's called accounting because you got to be accountable. They're part of the essential three. So, profit and loss statements, balance sheets, and cash flow statements. Cash flow statements are useful because they tell us how much a business is making. So, where its money is coming in from, earning, how much a business is spending, where its money is going out to, being spent on, during a specific time period, a quarter or a fiscal year. You can think of it as a running sheet as we track the financial performance of a business over time. This means we can see how well it's doing over time and why. So here's a cash flow statement. Might seem a bit gnarly, might seem a bit heavy. There are a lot of words and numbers. No fret though. We can make it all make sense by bringing it into color. Maybe this will be easier. Bang, like Technicolor when black and white TV went color. Also, this is for Bob's Business, Q4 2020. So if you're watching this now, you've time traveled. And if you're watching this way beyond 2020, this means the video has stood the test of time. So with that being the case though, so this is the cash flow statement. If you are not mathematically inclined, it's okay. It's basic arithmetic, addition and subtraction. And if you got to college or high school without being able to add or subtract, that's a miracle in itself. Can help you there. We've got a video on that. Check out the channel. Also, black so that it is very easy to get. So green's always good. Cash at the start of the month. And these are your inflows. Green because it's good to get money, make money. I like money. You like money. That's why we're studying this. That's why we're doing it. Inflows, that's money coming into the business. Then we've got outflows. That's money going out of the business. So you've got your things that cost the business money. It's red because you're parting with money. It's bleeding. That's the metaphor used. Your business is bleeding out money. But yeah, it's a necessary evil. As long as you're making more than you're spending, then you're good. And if that's the case, you've got a surplus, a positive number. If you're making less than you're spending, then you've got a deficit. That means you've got a negative number. Cash at the end of the month is what you've got to play with starting next month, because the money you have at the end of the month doesn't just manage to disappear when the next month starts. It rolls over. So October, we're starting at 17K. That's the first month of the final quarter. And our total inflows is $10,048,000. It's in green. Now we go to the red section. We've got outflows. These things cost us money, like our raw materials and service costs, as well as salaries. Cost of goods sold. So we've kind of gone over that on the other statement. See, you're losing money. If it costs you something, you subtract it. The total outflows, so you add all those up, you get a total figure for the outflows is $1,688,000. Do the math between the two, and you're left with $8,360,000. So with that, the cash at the end of the month, you just add them up, and that's what you got, $8,377,000. Now, October's done. November rolls over. That money doesn't disappear. You keep it with you. So you bring up to here. So November, we start off with $8,377,000. We add on what we've got for our inflows, add our outflows together, do some arithmetic there. We've got that orange figure of $7,827,000, and then we just add them up. So we've got $16 million to 60, yeah, basically. When you want to get more specific, $16,204,000. Now that's bonkers considering that we started with $17,000. I'm just going to use the highlighted figure here. Look here, so we've got 8.8 million, and it's just going to explain the massive jump. So maybe it was a unicorn company perhaps, or maybe we just got really busy or really lucky, or we've achieved massive economies of scale. Either way, we've been able to sell a lot here. And yeah, look at the price. If our costs only cost that much and we're making that much, Alrighty, and in the final month, December, just same thing over and over again. Just one thing I want to highlight too. Also, so we've got two expenses. I'll explain it more on the next slide. But basically, look here in my factory for forklifts and equipment, $5,000 the whole way. Didn't change. It's fixed. Same as the equipment, whether we use it at full capacity or not, we're still paying $130K a month. Those are fixed expenses. But if I need to hire more people or less people, I don't have to pay the same figure, because if I hire less staff, I'm paying less in wages and salaries. So look here, we've started 1 million on October. November wasn't so busy, relatively speaking. $950,000 I had to pay in wages, and then bang, pop that back to over the 1 million mark on December, because got to get ready for the Christmas season, for those politically correct, the holiday sales, holiday season. But yeah, those change, those prices vary, hence the name. It's a variable expense. So cash surplus is an easy formula. It is total inflows minus total outflows. That becomes a cash deficit if it's a negative figure, which means you're losing money if you're on a cash deficit. Cash surplus means you're making money. Just read that in opposite order, but yeah, the meaning doesn't change. You cannot sustain a cash deficit forever. If you keep bleeding money, they're going to close you down. The people are going to collect their money from you, either sending gangsters, banks sending letters, them trying to take your kidney or liver or something. Basically, they're going to liquidate you. They're going to shut you down. The debt collector is going to come hunting for you. Then the next one, cash at the end of the month, is cash surplus or deficit plus the cash you had at the start of the month, because you've reached the end of the month. So cash at the end of the month is the money you have to play with come the next month. As I said, your money just doesn't disappear, it rolls over. Here it is for those that are visual learners, cash surplus or deficit in the mauve box that I put in the bottom left corner, and there's the pop-up box there. So total inflows, there's the mauve box, minus total outflows. And then we've got the figure of 8,360,000. Next one is cash at the end of the month. So that's in the purple box in the bottom left corner. That equals cash surplus or deficit plus the cash at the start of the month. So there you go at the top, plus that thing on the bottom, and that equals our figure. And that means that when you add $17,000 plus the $8.36 million, and that is super bonkers. And again, we got to thank M2 here for that. Unbelievable, from 17,000 to 8. Oh God, do the math on how much it's increased there. The shareholders will be happy. So with that one being the case, that money carries over. See my nice moon pen? Alrighty. So those figures are the same. So be careful when doing your math and dealing with numbers. You have to be accountable as you count. One mistake anywhere ruins anything that follows it. So double check, triple check, quadruple check, pentuple check. I don't know what, I don't know the number prefix there. So even I saw some mistakes that I had to fix. This is just a hypothetical example. Imagine if this is a real business. Imagine explaining that to your workers or your shareholders or other stockholders. Fixed costs, those costs don't change despite changes in output. Variable costs change when output changes. So for example, the more you make, the more you pay. The less you make, the less you pay is for variable. So let's wrap things up. Cash flow statements. So this is just something if someone asks you, what did you learn today? Well, you learned that cash flow statements are important as they show us where money, cash is going in and out of the business. Inflows equals money coming in to the business. Outflows is the opposite. It's money leaving the business. Surplus means you're making money. Deficit means you're losing money. So thanks for watching and your support. Please subscribe and check out my other videos. Spread the word. Tell your classmates, your friends. If you're a substitute teacher and this lesson bailed you out, tell your colleagues, or if you've learned something, or if you've used this for homework. Also, check out my Patreon to spread the kudos and the love. And watching the ads helps too. So if you didn't skip them, if you clicked them, or if you don't have an ad blocker, thank you. Special shout out to the business studies class year 11. You guys motivated me to get these 3 videos out, and we have just hit 11 p.m. late night. All right, well, if I can do it, you can do it. Study hard for a bright future. I'll catch you later. Bye.